Hello and welcome to the Weekend Investing Stock Market Weekly Review for the week ended 6th of June. So many things happened this week. First, of course, the focus of President Trump has moved from other countries to other people. There is a fallout between him and Elon Musk, and that is having its own sort of narrative take over the tariff narrative that was going on. And gradually, the rest of the world has started to perhaps not pay so much attention to every sentence that he speaks, and that is getting, you can say, um, adjusted in the prices as we go along. The second biggest news for the week, of course, was the surprise 50 basis point cuts by RBI. So RBI also, this is now a total of 100 basis points in the last many meets, and people were expecting 25 basis points this meeting. It has happened at 50. It shows two things. One, confidence that inflation is very much under control, and there is room for this kind of a move. Ample liquidity has been put in with CRR cuts, and there is a second sort of angle to it, if you may say that, a contrasting angle, that perhaps the economy in the numbers that we see is not reflecting what RBI is able to see, and they are wanting to give it a much bigger push, and hence the 50 basis points has come. So it depends upon how you look at the problem, why 50 basis points has been done. In my own view, I think uh, there is tremendous growth potential ahead of us, and with situation at the global borders calming down, I think this was an appropriate moment to try give growth a push further. So I don't think it is a emergency 50 basis points. I think it's a opportunistic 50 basis point cut. That's what I see. But I mean, everybody could have their own view on this. So stock markets, of course, like interest rates being cut, most of the times they discount it much ahead. But when it gets surprised, then some of the interest rate sensitive stocks and sectors will do well for some time. So yesterday, as we saw, um, real estate do very well. You had NBFCs and banking space also do very well, and so on and so forth. So this week, from our research desk, we had all these fantastic content pieces to share with you. These have been sent on the newsletter or in the blogs, or you can also read them on the Weekend Investing app. Please go through all of them. There are some really good knowledge pieces hidden within there. Disclaimer, as always, please read the disclaimer fully and then proceed in the video. Do subscribe to the channel if you haven't so far. Let's see some charts now. So Nifty net 1% up this week. You can see that the entire last month we have spent in consolidation in this 400 point range, and now we are near the top of that range again. And if that range breaks, perhaps we may make a dash for an all-time high, which is not so far now. We are already at 25,000. In the weekly candle space, you can see that the two weekly candles before this week were inside candles. Inside candles meaning the four candles back, the rush that came through in second week of May. We are still in that range. We have not broken down from that range. We have not broken out of that range. And we are now at the cusp of that breakout once again. If next week we are going to go up, then perhaps over a period of the next few months, we perhaps may challenge the previous high also. The setup is very nice. It looks like a sort of a very tight inverted head and shoulders pattern, but let's not put the cart before the horse. Let's see where this goes. S&P 500 looking also great, 1.5% up this week. Also 6,000 has been achieved again, and just imagine a country where all kinds of turmoil is happening right now. People are calling for a recession. Rates are way beyond what they can afford, yet the stock markets continue to run. So a lot of times, markets will have no relation to the imminent earnings, especially compared to what's happened in the 3 months gone by. It really has no relevance to price now. So from that perspective, I mean, the market is looking for liquidity here, and the market is sensing that there will is going to be tremendous liquidity going forward, and that's why this boat is running. Gold up 0.93% this week. It made an attempt to go near 10,000 again per gram in the Indian market, but was smashed down. I think at the end of the week, the gold stands somewhere near 33.20 on the dollar basis. So it has not been able to break out, but it is spending time just like it has earlier in the past done here. That's the kind of consolidation that is happening. Once that is done, I do certainly hope that we will get another leg up. The dollar index is also not falling any further, 0.24% down this week. So this is the sort of antidote uh, to gold. So whenever you will find the dollar index is falling hard, gold and emerging markets will go up. So you can see here the last uh, 7 8 weeks has been sort of consolidation in and sort of non-directional, and hence we are also witnessing the same in the gold market. But these kind of moves, when they will come, sharp down moves, that will cause liquidity back into emerging markets and precious metals. In the benchmark indices overview, you can see all indices made good gains, 2.69% on small caps and mid caps, Nifty Next 50 at 1.8%, Nifty 500 at 1.59%, and Nifty 50 at plus 1% gain. In the sectoral overview this week, two big moves, real estate 9.5% just in 1 week, and capital markets 8.9% again just in 1 week. Two very big moves happening right here. And if we see the last 1 month, you will be able to see that there are three or four basically sectors that are really moving. Real estate has moved 21% in the last 1 month. PSU banks have moved 13.9. Media has moved 13. Defense has moved 27%, and capital market at 27.9%. So some sectors are standing out, which are relatively very, very strong. And you can see this in the sectoral momentum across different periods. Capital market at the top, defense, then banking, real estate, financial services, PSU banks, and tourism. These are the top sort of names. And you can see the bottom, FMCG is at the absolute bottom, IT is at the absolute bottom, energy, pharma, commodities, even autos, pretty much designated down to the bottom. You can see metals is trying to come back up, tourism is pulling up back, PSU banks have also been pulling back up. In the very short week, real estate has been the top gainer, and private banks actually losing ground to PSU banks in the very, very short term. So some of those changing patterns right there. In the weekly advance decline stats, pretty much even for Nifty, 48% advances and 50% declines. Perhaps the rest is flat. Yeah, 2% is flat. Nifty Next 50 and onwards, you had more advances than declines. So the bias remained towards the positive side on almost all indices. In the percentage of stocks outperforming the benchmarks this week, CNX 500 small cap 41% and 44% stocks have outperformed the respective benchmark, which is not very high, but Nifty especially has had only 28% of stocks outperforming the benchmark. So most of the stocks in Nifty are actually not doing as well as Nifty. So very few stocks are causing the Nifty to go up, whatever it is going up. And the concentrated concentration is very stark in Nifty, not so much in Nifty 500. The same if we see, let's say over 1 year, you will see they're all almost evened out at about 40 to 50%. In the drop from 52-week high, you can see Nifty Next 50 is still, the stocks are very much, almost 76% stocks are still down 10 to 40% right here. And very similar numbers are there for mid caps also. So almost 70% stocks in mid cap are down 10% to 40%. And if I include the first 10%, then 95% stocks, 97% stocks are down 10% to 40%. So the ratio, which was the spread, which was more, uh, you can say weaker for mid and small caps, is pushing towards the left. Nifty, of course, has the least amount of damage with 70% stocks in the 0 to 20% fall range, and 20 to 40% is only 28%. So large caps have been the least hurt, of course. And as we go down the ladder, we see more and more stocks towards the deeper cuts regions. Like micro cap has about 20% stocks which are 40% and more hit on that front. So is the trend improving? Let's see. The 50-day moving trend is absolutely flat since last many weeks at near 81%. So 81% stocks are above 50 DMA, which is a healthy sign. And the 200 DMA still is a poor number. We are at nearly 45, 46%. This ideally, once it moves above 60%, will start to become meaningfully good for the market. In the trend check on sectors, let's check the 200 DMA trend. So financial services, as you can see in the last many weeks, the same sectors have been leading the rallies. Financial services, private banking, real estate, PSU banks. These are the stocks where you are having, the maximum number of stocks above the 200 DMA. So 70%, 75%. While you can see that uh, IT is at the exact bottom. Energy, media, pharma, oil and gas, public sector enterprise. These stocks have been absolutely in very poor state. Um, I don't have all the sectors here, but you can see that CNX 500 is 46% stocks are above 200 DMA, and there are sectors which are much weaker than 46%, and then there are sectors which are much stronger than 46%. So where we find that more and more stocks are above, doing better than the average on the index, that is where you will find most of the setups for, at least for long players, if you are a discretionary investor. In the FIDI stats, FIs have been selling for most of the days, or rather, I mean, flattish for 3 days, and have sold the last first 2 days in the week. DIIs have bought all 5 days, and heavy numbers, last one being 9,000 crores. So numbers from the institutions are reasonably healthy. You can see here that the last 30 days, FIs have bought some 4,900 crores. So there is selling while there is some buying also. So it's nearly zero, but 4,900 crores, whereas DIIs have bought 87,000 crores in the last 1 month. So the numbers do add up quite a bit, and it is showing you the domestic strength is substantial, and it continues to push the markets on the higher side. The FIIs, however, are not yet pushing the pedal too much. The fall in the dollar index, if it comes around, I think will accelerate this, and that's where we will see both of them perhaps supporting the move forward. So let's hope for a great week next one. I wish you all the best for this week, and I'll see you in the next one. Bye.